Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, and this is the 2nd of May, 2017. We're just after 2:35 p.m. Central Daylight Time. Remember that the FOMC meeting began today. We're going to get at noon tomorrow. I think it's Central Time, noon tomorrow. The FOMC statement, everybody will look at it, and in 10 minutes they'll be over whatever it says. We'll be on the worrying what the June statement is going to do. Expectations are this, for the Fed to do anything right now in raising interest rates at this point in time. That'll all change come June, where there's right now about a 70% probability that that's where they'll do it. Could there be a surprise? There can always be a surprise. Always accept that. Stock market sort of still that world of you got the NASDAQ and you have other indices. In the metals, the gold market got down again into the low 1250s, found support, come back up a little bit. The silver market, you know they've broken the heck out of it, especially in relation to the gold market. Copper market saw a bit of a setback today, especially once we saw that the manufacturing PMI in China has slipped more than traders thought, and that took some of the steam out of that copper rally based on the fact of the potential strike in the Grasberg mine in Indonesia. So let's talk about what gold is doing, and I'm going to be on the weekly chart still saying this market still has upside bias, and yes, prices are slipping back. It supports the 18-week moving average of closes, under that the 100-week. It is not trending. It could once prices start up again. The question is, when will they start up, and what does up mean? It means having an up week somewhere along the line after this week is over, unless this week all of a sudden goes through last week's high and closes strong. Believe it or not, then the swing line would turn up because you'd have an outside week up. In terms of the correction, you're down about $40 from the peak. The world, if you're a bull trader for gold, is not ended, but the market has gotten hurt with the current correction. And you see that on the charts right here because today's low was the most recent low since the middle of April. So that's a heck of a break the market has pulled back on. As you can also see, the pattern is one of a higher high and a lower low. So there's no trend, and it goes without saying you're under the 18-day moving average of closes, and you're under the 200-day as well in this case at the 1263.10. These numbers become resistance on the way up. The 100-week average is way under us. So I will say the bias is definitive to the downside unless you get back over 1272.40. What else do we see on the chart? Well, if you let go to the downside, the Bollinger Band might be the support area that finds where the market's going to, in other words, where traders might want to cover some shorts at 1245.40. I think we can define that as support, and these areas from, let's call it 1263 to 1272, the resistance zones. Momentum-wise, you're oversold as can be already. So we've had a break. The market's gotten oversold, and we're waiting to see what happens. The gold-silver ratio continues to favor gold. Every time these numbers go higher, you need more ounces of silver. You need 74.6 in your grocery cart, pushing it down the street to your coin dealer to make an exchange for an ounce of gold. Now, that doesn't take into account his commissions or how he marks up gold or silver. The gold ETF is still coming down in price. As you can see, you're at 119.62. Fighting near that 200-week moving average is actually what you're doing. Again, an oversold market. What would negate the downtrend is getting over 120.77, which is about $1.15 away from where prices are right now. In the GDX, it's the same thing. You've got lower highs, lower lows, running the lower Bollinger Band. The difference here is this market could embed. So here's both numbers on the slow stochastic under 20. They were both under 20 yesterday, not the day before. If they're both under 20 tomorrow, the market is said to be embedded, and that really hurts this market because it locks in the bear trend until that reading is lost. It's another bad number for that. Silver already has the embedded readings, and notice how this market keeps falling under the 18-day average. I don't know where the market finished today. I should have looked at it before. It's back over it right now. You're stretched out with the number of days. I think you're at something like 6 or 7 days if you close under it today, under that lower Bollinger Band. I'll be wanting to study it. I haven't seen recently anything over 7. 5 is the norm. So you've stretched this price out for whatever reason. You're doing the same thing in the silver ETF, but I don't count those amount of days in the ETFs. It's not the same type of market as futures. In futures, you had 1, 2, 3, 4, maybe 4 in a row. This could be more, and I've never done the study to say that it can be 7, whatever, just haven't done it. In the copper market, you got to the upper Bollinger Band, pulled back to a potential support zone of the 100-day average. More likely the 18 is the support. You're knocking on the door of getting an overbought reading unless you pull back a little, and the trend is up. So there's no reason to be thinking the bear side of this market at this point. In the platinum, you keep hitting the lower Bollinger Band and then bouncing away from it, which I'd expect. Oversold, been in a downtrend, hit its downside target starting yesterday and followed through today. And the palladium market keeps gaining on the platinum, and I think I've mentioned that. I know I keep mentioning it in my morning updates that that's where the spread traders have been. Then we get to the dollar, which has got an embedded reading. It just looks bearish. And if this market tomorrow drops, you could be going down to that lower Bollinger Band. There's nothing friendly on this dollar index chart. In order to get a bit friendly, you got to lose this embedded reading. It hasn't occurred at this point in time. Let's talk about what the seasonals do. You know, I think April was a difficult trading month, but at the end of the month, I started seeing the plays coming in from the seasonals, and they started kicking in. Give you an example. You were limit up in feeder cattle today and fat, and I think the more research at the end of the month was putting you long into those markets. Not every trade wins with them, believe me. I recall some of their crude oil trades, which the seasonal is supposed to be up, and as you know, the market's been falling. But it's another tool, and that's all that it is. It's another tool. And when I look at seasonals, I like to know what the trend of the market has been over years, why that exists, and they give it to you. They explain it in writing. They show it to you all through here. You're going to get a lot of research on the website. If you haven't seen it, do yourself a favor and look at it. Never trade seasonals by themselves. That's the caveat I'm going to tell you. And I believe in that, and that's why you got such a big disclaimer on it. I've seen people try to do that, and they will tell you at more research. It's not the way you use the tool. It's one of other tools. We want to give you a 2-week trial. You get a user ID and password. How do you get it? It's so simple. You're going to give us a call. You can go to our website, www.iraepstein.com. You can click up here at any point. You'll see the icon from the YouTube videos. Just click that. The form will appear in that way. Under us on many different websites, it also says click here for Ira's information. So you're going to get access to everything that you're seeing here. We give the name to more. They're going to send you the user ID and password and go on for your 2-week trial. I've only used it about 40 years or so it gives you an idea that I believe in it. I've used other services as well, but as long as they've been around, I've probably been looking at it because I always was looking for the old seasonals. And I have books still from Hornblower Weeks and others that went into seasonals, and I got into them via the grain market especially, and it just carried me to other things. Take a look. You might learn something. I'm Ira. You have a great day, and I will talk to you all tomorrow.